Okay, we're going to talk about finding balance in volatile markets, creating a trader's blueprint for success. I'm really happy to be here, so thank you for inviting me as always. And I just want to ask you a few questions, and you can answer them in the chat box if you'd like. Are you troubled by your inconsistent trading results? Do you find yourself frustrated when you take your profits too soon or you get in too early, only to suffer when the trade goes against you, even if you have the right view? I'm seeing a lot of yeses here. Yeah. Are you worried about inflation and all the volatility in the markets this year so far? Yeah. And have you reached a level of success in your trading, but you're just not sure how to grow from here? Okay, so if you've answered yes to any of these questions, then it's great that you're here, and hopefully you've come to the right place, and it's clear that you long to have a bigger future for yourself. But just know that whatever you have done in the past will equal what you do in the future if you continue to do the same things you have always done. So my name is Jody Samuels, and welcome to Finding Balance in Volatile Markets, Creating a Trader's Edge Blueprint for Success. And thank you everyone for being here, taking time out of your busy schedule to be at this wonderful event. And I'm going to do my best to make sure this session is well worth your time and effort. For those of you who don't know me, I just want to tell you a little bit about myself. For 15 years, I worked for JP Morgan, a US global investment bank, first on Wall Street and then on Bay Street. I started in foreign exchange. I was a foreign exchange interbank trader responsible for making several $1,000,000 a year for the bank. And today I trade stocks and options, futures and Forex for my own account and run my trading and education company called the FX Trader's Edge, where I coach and mentor traders. I wrote a book called The Trader's Pendulum, The 10 Habits of Highly Successful Traders, and created a coaching program to teach people how to use entrepreneurial skills and habits to develop their trading business. So today, I'm going to give you some tips for finding balance in the markets, give you a trader's edge blueprint for success, and show you a strategy that I use to find trades and take trades in these markets. And at the end, I will give you an opportunity to be coached and mentored by me. We're going to start with the disclaimer. Please read it to yourself. Thank you very much. Traders need clarity and skills to deal with the trader's pendulum. Trader's pendulum swings back and forth, as you know. In order to have a blueprint for success, traders need clarity. So I've broken it down, this is from my book actually, into the market pendulum, the emotional pendulum, and the financial pendulum. The market pendulum is the market swings. And we all have experienced tremendous market swings over the last little while, getting to be a longer little while now. So the market swings is when the market is in trend and gives back. Trend and corrects. I used to say that, and that used to be true, but now we have impulsive moves to the upside. We have impulsive moves to the downside. There is a little less clarity. So trading we've really had to adapt as traders to this market, and it's no longer a buy and hold market, as you all know. So many traders have gone to very short-term trading or really put on high probability trades. And I've seen a lot of traders change their style over the last year. The emotional pendulum is what we all experience. I speak to a lot of traders. I spoke to somebody last night in a little coaching session who said, I don't know how to deal with my emotions. That's right. We all have emotions when we trade. And usually what shows up in our personal life is also what shows up in trading. We're going to talk a little bit more about that. And then the financial pendulum is all about winning and losing, and being able to take losses, because you're not going to be successful if you can't take a loss. Every trader takes losses. It's just important not to bet the farm when taking a trade, so that you have longevity in trading, that you're in for the long haul, that you're trading, you're running a marathon, not a sprint. So some of the emotions that traders go through, I think fear and greed sort of captures it all, but self-doubting versus overconfident, cautious versus reckless. Some of us are very organized in our trading, and some are more on the disorganized side. Being flexible versus being stubborn, calm versus nervous. These are all of the daily emotions that we deal with, and we have to work through them. So let's talk about fear and greed first. The pendulum is something that swings back and forth from one course, opinion, or condition to another. And during my trading lifetime, I have experienced most of the emotions that traders face, I guess all of them probably. And these emotions behave like a pendulum. They swing from one extreme to another unless moderated. And I view extreme emotions as part of a continuum where the ideal balance is somewhere in the middle. I'm just reading this, so you can read it with me. For example, at the fulcrum of a teeter-totter. Technical traders or hobby traders learn a lot from their fellow entrepreneurial traders, including how to moderate their emotions. So let's try and understand these pairs of emotions and how they impact a trader's bottom line and modus operandi. The first pair is fear and greed. But just a little something else. When I worked at the bank for 14 years, actually 14 years, I experienced so many emotions, and that's what drove me to write the book, The Trader's Pendulum: The 10 Habits of Highly Successful Traders, because I really did feel that I experienced it all. And I still am, although now I have a better understanding of how to deal with the emotions. So let's talk about fear and greed. Okay. Let's discuss a fear scenario. Technical trader or hobby trader is struggling with taking risks. I'm afraid to take risk and cannot afford to lose my $20,000 account. I had double that amount and lost it over the last year when I was planning to trade for a living and leave my job. Now I am totally stuck and afraid to take a trade. So how many of you have experienced fear in your trading? You may have gone through a string of losses. You may have lost a bigger amount than you had planned for in your trade plan. So how many of you have experienced fear in your trading? Me, yes, yes. Okay. Greed scenario. Hobby trader or technical trader had 3 winning trades in a row and decided that she would risk it all on a trade that was a sure bet. I'm on such a winning streak that I can't lose. I'm increasing my position size so I can take that trip to Asia that I always wanted to take. Sure bet. Okay. So it's often said that the markets are driven by fear and greed of the masses. And that's where Elliott wave analysis comes in. That's my forte, learning about the market cycles. And I teach my students about the market cycles. So it's really driven by fear and greed of the masses, by traders like you and me. People have a natural inclination to want to achieve wealth, and so will follow the herd when a market is moving up with dollar signs in their eyes. And I'm going to show you an example of this by looking at some charts. And then when that investment starts losing or the market drops, they fear losing their capital and sell so as not to take a loss. The dynamics of fear and greed drive the market. So what can we do to temper the emotions between fear and greed? Well, one thing is, instead of focusing on the money, learn to appreciate the rewards of trading. And secondly, trade with money you can afford to lose and manage the risks so you can accept the worst case scenario of every trade taken. Understand the risk before the trade is taken and sign off on it? How many of you know what your risk is before taking a trade and you don't just take a trade impulsively? How many of you, well, I guess I can't say all the time because we are not we we're not perfectionists, we're human. For the most part, how many of you risk manage your trades? And yeah, I understand risk most part. Yes. Okay, that's great. That's great because a lot of traders don't. And when you don't do that, that's when you can get into trouble and lose and lose your account very quickly. So before we can design a blueprint, we need to know where we are today and where we are going, correct? So like reality TV programs. I'm sure some of you have watched some reality TV programs, the before and the after. Well, on today's Makeover Trader show, the before is the hobby trader who lives at Old Habits House. And then once the transformation takes place, hobby trader becomes an entrepreneurial trader running his or her own trading business and lives at transformation villas. So Old Habits House is where nothing changes. The results that you're getting now are the results that you'll get in the future. But transformation means changing what needs to be changed in order to become that entrepreneurial trader so that you get different results. That's the key thing. You want to grow. Just as outside of trading, we want to grow in our lives, so too in trading, we want to grow in our lives. And telling you when I'm speaking to you about this, it's so apparent to me that what I'm talking about is really life because this is how we are in life. So what shows up in our personal lives will show up in our trading lives as well. So meet Farah and Fred, our hobby traders in the technical traders trap. They're out of shape. They have no business plan. They're not making money consistently. They lack discipline. They trade emotionally. They have no trading plan. They live at Old Habits House. After the transformation process, they want to become like Steve and Stacy, our transformed entrepreneurial traders who are in shape. They've written a business plan. They make money consistently. They trade with discipline. They trade unemotionally. Well, not always, and we're not perfectionists, and they have a clear trading plan. Now, the key is that some of you might be very successful traders. Some of you might be very experienced traders. Some of you might be new traders. I don't know who you are, but just know that whether you're new or experienced, you can remain in quadrants 1 and 3, meaning in the hobby technical traders trap, or you can transform yourselves and move from the left side of the quadrant to the right side of the quadrant as a transformed trader, whether you're new or experienced, and become successful. Everybody can do that. It's called working on yourself. So the first thing that you have to know is, why are you trading today? What are your reasons for establishing a trading business? And don't just tell me to make money, because that's not the only thing. You have to have a real strong why in order to be successful. So what is your why? Is it to have fun? Is it to be part of a community? Is it to make some money on the side? That's all hobby trader mentality. Or is it to reach a certain income level, to reach a certain value in your portfolio, to be able to purchase a vacation or a retirement property? Each of you has your own reason, or to pay for, education for your children. Each of you has your own reason. But did you know that the bigger your why, the easier your how? Like, when you know why you are doing something, the how becomes that much easier. And there are, some reasons why traders get into the trading business, self-management, you are an entrepreneur, financial independence, creative freedom. You can definitely be more creative in your own business. And of course, after what we've all gone through over the last couple of years with the pandemic, we all had an opportunity to work from home and really explore other opportunities. And in fact, so many people began trading as a result because they were working from home anyway, and this is a great business to run from home. That gives you more time. You can work from anywhere, anytime, and some are really passionate about trading. Speaking about passion is really important. If you set a goal and understand your why behind the goal, then you'll have passion driving your decisions, and it will help with perseverance. So passion helps us achieve our goals and make our dreams a reality. And the important thing is to think big as you're drilling down with passion. Passion takes us from good to great. And every entrepreneur knows that if you set a goal and understand your why behind the goal, then you'll have passion driving your decisions, and it will help with perseverance. You have to know your why. So your why gives you the passion to keep going and to find the answers and to find the right fit. I mean, you hear so many traders offering you services, and you need to find the right fit. We're all individual human beings. We are not going to, not everybody is going to resonate with me, for example. Although I'd love you all to say, yeah, I resonate with you, Jody. Sure, I'm going to join your program. I'm going to use you for coaching as well. But that's just not fact. Okay. So let's just talk about the experience that a hobby trader will go through when they're first starting out. At first, they're excited and confident, but they have no goals. They're easily influenced. They hop around from, guru to guru, mentor to mentor. They're easily influenced. They trade impulsively because they have no plan in place. They have no boundaries, and they have no rules. We need to have boundaries as human beings. We need to have rules. We need to have structure. At least I do. I'll speak for myself. I need to have structure in my trading life, and I need to have structure in my personal life as well. Then, determined to make it big, hobby traders get information overload. They want to learn everything there is to learn about trading, which is nearly impossible, and learn every single strategy, which is absolutely ridiculous. Because how can you possibly be successful trying out all these different strategies? And then confidence begins to wane. Finally, they feel lost, helpless, and hopeless. Why? Because the bottom line hasn't improved at all. They've experienced losses, frustrations, feeling stuck in the muck. In short, they're out of shape. So let's bring this to the markets now and see how the examples of volatility in the markets translate into emotions. So this is the SPY, and it's a weekly chart. And if you look at the left, let's try to feel the fear on this. Let's say the market is finally starting to go up. So you buy here, and then it goes up a lot, and you're still holding your position, and you think, okay, we're going to sell off now. So you sell, you take your profits. Then the market goes up again. And what do you have? You have FOMO. Greed sets in. The whole market seems to be so optimistic and exuberant and then they're all loading up. So you don't want to miss out. So you buy again at the top of the market. And then what happens? The market comes down, it moves back up again, and you think, okay, great, we're going to go up again. I'm still holding on. And then we have a lot of red candles here, and we go down. And then we have one strong green candle, and okay, I can weather this storm. We're going to go back up again. And then we go down once more, and you bail. You can't take it anymore. You bail. And then the market starts, you go, I'm going to wait. I'm going to wait until the market goes up again, and then I'm going to get in long again. And then the market goes up, and you're buying up here. and then the market comes down and you're bailing down here and you are full of fear, you're full of panic, and you're discouraged. This is bail territory. So what do we want to do? We want to train the brain to do the opposite. And it's not easy, but we want to train the brain to be selling when we have our at the market top, once we've done a market reversal, and to be buying when others are bailing. And it's not easy, but I'm going to show you my system, which shows you, and you get a glimpse of it with these little triangles and dots. Like the purple dot is the end of a very large swing move, and the gray dot is the next level swing move. So I'm going to show you how we trade with this particular strategy. And let's read what Warren Buffett has to say. Be fearful when others are greedy, be greedy when others are fearful. So what he's saying is, when others are greedy up here, you should be fearful. You should think sell, not buy. And when others are fearful down here, think greed, think buy, not sell. And we are seeing this daily in the markets. Like, this is the weekly chart, but we are absolutely seeing daily the market moves up, and then the market moves down, and the market moves back up. Like, so I think we still have to think about selling on the rally, buying on the dip, on these extreme moves, and not being married to a view. I think we're still in that environment, and we just can't possibly be married to a view, because one day our P&L is going to be up, the next day it's going to be down. We can capture, as traders, slices of the P&L. So in this market environment, we are not looking for the home run. We want to capture a slice of this move up. We can do that. We want to capture a slice of this move down, or make sure we're not long during this move down. We want to capture a slice of this move up. We'll know if the market really turns around and starts to make new highs. Like, that'll be a different market environment, but it's not this market environment. There's just too much uncertainty. And what you're looking at here is, this is really an Elliott wave trend move higher, and then a corrective move down. And do you see these moving averages? This is a beautiful, beautiful setup. And I'm going to show you tons of examples of charts which have the exact same picture. And our setup is to buy down here. So we have tons and tons of stocks that have gone through this massive sell-off and approach buy territory. And when we're looking to buy, we're not looking for a massive rally. We're looking for stability. We're looking for, okay, maybe we've seen the low and now we'll stabilize. We're moderately bullish at this level, but we just don't want price to continue to move down. And I'm talking about expressing it through the options market or through buying shares, but I'll get more into that. So this is an Elliott wave correction. That's how I see it. And sometimes corrections can last longer than we might expect, or that we quite frankly that we want, because really every trader wants to have a correction and then be ready to buy for the next swing move higher. But this might have been the case, but look, we came down again. So we have to be a bit prudent and a bit cautious about this. But this is clearly an uptrend. When the wave separates from this tunnel, this is the tunnel, and price is moving away from the moving averages, that is clearly an uptrend. But what also happens is that price will come back to the moving averages. So when we are stretched, like we're very stretched over here, price always comes back to the moving averages. We're stretched up here, price always comes back to the moving averages. And in this case, this is a classic 1, 2, 3 reversal pattern where the market moves down, the market trades back up again. without making a new high, and then continues its merry way lower. Okay, 1, 2, 3 reversals are my favorite chart pattern to capture the end of trends. And what I like to do, if I'm thinking about buying down here, and we'll get into more details, then I would look at the smaller time frames to see that 1, 2, 3 reversal. This is a weekly chart, so I would look at the daily chart and the 1 hour to look for that reversal. Another thing that I want to just talk about in terms of trends is when you have a trend, you can draw your channel lines around that trend. When we break out of the channel line, it usually means that we are going to have a correction. So let's get back to the top 3 problems that hobby traders face, and then I will, when we're done with the problems and what the hobbyist reaction, discussing what the hobbyist reaction is versus the entrepreneurial trader solution is, we will get back to the market. So let's discuss problem number 1. Large drawdown caused by bigger position than usual. Okay. Large drawdown caused by bigger position than usual. So what is the hobbyist reaction? Think of your reaction first, what your reaction would be without reading the slide, and just see if you have a different reaction. So the hobbyist reaction is, I give up. It's an extreme reaction. The hobby trader is ready to stop trading at the extreme. Greed gets in the way after a few wins. So it's the balance between fear and greed. So the large drawdown causes fear and this giving up reaction or throwing in the towel reaction, maybe stopping trading for a few days, but they're right back at it the next day or a couple days later or a week later, and then greed gets in. It's almost as if they've forgotten fear that they experienced to begin with, the large drawdown. But what is the entrepreneurial trader solution? The entrepreneur trades with risk management, position sizing, and trade management with a clear plan to manage the trade. So if you're not doing that now, I would strongly recommend doing that. You know, it was less important to do when the market was one way. I'm talking about the stock market. But and if you're trading forex or, you know, commodities, it doesn't matter what you're trading. Really, it's the same thing. You want to be able to plan your trade. You want to be able to manage your trade. So what that means is, let's say you get into a position and the market starts to move up and you get out of your position at one price. Well, I've had traders say to me, I just can't seem to extend my gains. I get out, you know, way too soon. And then my losses are bigger than my gains. And I say, well, did you try taking 2 or 3 positions? Now, it doesn't mean taking 2 or 3, taking a bigger position size. You have to still risk manage, but you might, you want to maybe get out of your 3 positions at different levels so that you're taking some profits along the way, and maybe you keep that 3rd position to capture a bigger gain. Okay, so that's one suggestion. That's what I tell my coaching clients. Second problem, pain of consecutive losses caused by over trading mindlessly. Now, I totally get that when you're first, you know, getting into the market, there's just so much to learn and you just want to trade a lot. You love to trade. I mean, let's face it, the market is really exciting. I mean, I can't tell you, when I was trading at JP Morgan, as an interbank trader, we had offices all over the world. And yes, I traveled all over the world. That was fun to meet all the different traders. But I would have like, I would, I was married. And when I was married, I had this little Reuters machine next to my bed on my night table. And I would wake up during the night and look at the markets because all of the different currency rates would be flashing on my little Reuters machine. And I would leave orders overnight and ask for phone calls at certain levels. I think I was, like, looking back, it was absolutely insane, because what would I do when I'd get the call that the you know, the British pound is here, or whatever, the dollar yen is here, or the pound yen is here. What would I do? 9 times out of 10, maybe even more, I would do nothing. I would do absolutely nothing. So I get that it's very exciting when you're first starting out in the and trading the markets. So, what is the hobbyist reaction after the pain of consecutive losses? I think I need a new mentor, blaming the mentor and having a deflated ego. So many of you are in services and other people's services. So it's very easy to blame the mentor. It's very easy to do that. What would an entrepreneurial trader solution be? Well, an entrepreneur is problem focused. They review strategy, trade selectively. Don't always, if they don't agree with their mentor, they don't take the trade. They have a clear mental state. They wait patiently for the next trade setup and review the trades at the end of the week so as not to make the same mistakes twice. It's really important that we learn from our mistakes. It really is. And some of us learn the hard way. I learned the hard way when I went into the stock and options market from Forex. I learned the hard way, and I had to really take a good look at what I was doing and do things differently. And now I'm doing things differently. So the third problem, they move the stop before it hits, and the market continues moving against them. I think I wrote that wrong. Nope, I wrote that wrong. Yeah. Oh, no, I didn't. Okay, this is what I mean by this. They move the stop before they get stopped out. So in other words, if you're long and the stop is below your long entry, they move it lower. Okay, so they don't they think that they don't want to get stopped out because they think that the market will turn around and go back up again, but in fact it continues moving against them. So the hobbyist reaction is, I knew the market was going to reverse. Would have, should have, could have, blaming the market. The entrepreneurial trader will follow the plan, exit the trade, and move on. There are lots of train stops along the way, right? Lots of days to trade. Take the loss with no ego. Fix the problem and don't blame. It's really important to, if you take a trade, get out of the trade completely. Don't try to fix it by moving the stop, or just get out and move on. And this is something that I used to tell my traders to do on the desk, at JP Morgan such a long time ago. Just when they would come to me and they would say, oh, Jody, I don't know what to do. I have this position. In fact, it happened to me, but it happened to me. That was my first learning experience. Oh my gosh. So they would say, yeah, what do I do? And I would say, just get out of the position, and tomorrow's a new day. So highly emotional states make us vulnerable to impulsive decisions and lapses in concentration. Rules enable us to stay grounded on the trading front, even if we are emotional at the time. So we don't want to be in a highly emotional state. If that's why we have rules to temper our emotions. That's really, really important. We want to stay grounded. So how to become an entrepreneur? Now we're getting to what we can do about this. Change your habits and do what successful entrepreneurs do. So how can we change our habits and move to transformation villas? Well, we cannot master and control the external world. I'm sure everybody agrees that we can't control the markets, just like we can't control our lives, right? We can't control what goes on in our lives, but we can change our internal world, our thoughts, feelings, and actions. And that's something that I personally work on every single day, not necessarily for trading, but I've had a lot of challenges over the last little while, and I can't control these challenges, but I can control how I react and my thoughts and my feelings. And so can you. So let's go back to the problem, and let's look at this with new lenses. The problem is the old pattern, and then the entrepreneurial trader solution will be the new pattern with tools. So the old pattern problem is taking a bigger position than usual and having large drawdowns. And the old pattern for the hobby trader is that they're ready to stop trading. But the new pattern is to use risk management and trade management. That's a new pattern. That's a pattern, a skill that we can learn, a skill that we can develop. And with practice, we can do it every single day, and then it becomes second nature. It just becomes a new pattern. So the old pattern of overtrading mindlessly and then blaming the mentor with deflated ego. Well, what is the new pattern that we can implement? We can wait patiently for the next trade setup and practice waiting patiently for the next trade setup. These are little things that we can change one thing at a time. The third pattern, moving the stop and blaming the markets. Well, the elite trader, the entrepreneur will follow the plan, and maybe it's about not moving the stop. And I know it's painful, but maybe it's about that, not moving the stop. Okay. So what is the trader's edge blueprint? Edge is the overriding ability for a trader to be resilient to whatever the market sends their way. So E is for elite entrepreneur, D is for define goals, G is for game plan, E is for energetic mind and body. Take a screenshot of this. This is your blueprint. Take lots of notes. So having the edge for E, elite entrepreneur, means having accountability, being accountable, having some expertise, so learning the skills. It's really important to be accountable to somebody, whether it's your coach, whether it's to your trading group, because traders work alone. And if you're working alone in your house and you're not accountable to anyone else, it's very easy to shove the losses underneath the carpet, sweep the dust underneath the rug, whatever. So same kind of idea. Losing the edge, lack of focus, lack of passion. Focus is really, really key for me. I don't know about you. Passion as well. D for define goals. So having the edge is about writing a trader's plan and having traders' goals, trading goals, knowing your why. Otherwise, you're just going to be a hobby player. You're not going to be a serious entrepreneur. You're going to be a hobby player. And what that means is you'll make some, you'll lose some, maybe you'll lose more, then you'll lose more, or maybe you'll break even. G for game plan. The game plan is the trading system. And when I look at the trading system, I look at the trading strategies that make up the system. There are different strategies that I trade depending on where we are in the market cycle. So I could have a trend, like a trend strategy where I'm just, when the market is trending, I'm there, buying pullbacks, for example. Or the strategy that I'm going to show you today is called my breakout 4 strategy. And that would be the game plan. Losing the edge is winging it, like, winging every trade that you take. E for energetic mind and body. So with that, you want to have winning attitudes, positive trading beliefs. You want to do a little exercise, meditation. I tell you, for me, I meditate, and when I don't meditate, I am not in optimal shape. So I really need to meditate to clear my head, to be able to trade better. Losing the edge is having losing attitudes, negativity, and reverting to old habits. So there's your blueprint. Now let's just go into this a little bit. I'm going to talk to you about my game plan for G. Let's start with E. We're just going to do E and G today. So a little bit of E, entrepreneur. So these are general trading rules that an entrepreneur follows. So for example, you might, you want to determine your risk. I risk no more than 2 to 10% on my account on any one trade. I remind myself that trading is a marathon, not a sprint. I do not take on unnecessary risk by adding more contracts to my trades. So the 10% is high. I wouldn't lose 10% on, if I take an options position. I would never lose the 10%. I would obviously set my my loss a lot less than 10%. But when you have a percent drawdown, the percent gain required to recoup the losses is larger. So if you lose 10% on your account, you need to make 11.11% to recoup those losses. If you lose 50% of your account, you have to make 100% gain required to recoup those losses. So this just increases exponentially, okay, until you're busted when you lose 100% of your account. Another general trading rule that you might want to, and you can come up with your own general trading rules that you might want to follow, is trading is about probabilities. Know the win-loss ratio, the win percentage of the strategy that you're trading. I will trade what the market gives me and not focus on individual trade results. Okay. And third, the market doesn't go straight up. The market can go up, down, or sideways, depending on where the stock is in the market cycle or currency. Or I'm happy trading neutral to slightly bullish conservative strategies as my bread and butter. So now let's talk about the game plan. The game plan for planning the trade and trading the plan. The game plan is planned, defined, and tested trading strategies. And once you define the strategy, the trade plan is about taking the trade. So why having a system is vital? System is really vital to provide a consistent methodology that will have a win-loss ratio above chance 50%. Yeah, it's really important to have, there are a few things that go into winning with the system. One is the win-loss ratio. You might have a very high win-loss ratio. So when you take trades, you're winning 70 or 80% of the time, and that's great. But if you have a 50% win-loss ratio, that's okay too, as long as the size of your win is greater than the size of your loss. So the size of your win has to be greater than the size of your loss if your win-loss ratio is 50%. So know that about yourself. And by the way, you might trade somebody's strategy, and you might have 100 people trading somebody's strategy, and you're all going to get different results. You're not going to get the same results as your mentor. You're all going to get different results because you're going to trade it differently, because you're going to take some trades and you're not going to take other trades. So just know that you're going to get different results. And having a system is also vital to reduce the influences of human emotions and predispositions. So it's really important. We're here to control our emotions, and if we're on the greed, fear continuum, we want to be somewhere balanced in the middle. So we don't want to be on either extreme of the pendulum swing. So let's get back to our picture of SPY. And I already discussed a fair bit about this, that just to review, these are the emotions in the market. So how many of you have experienced these emotions that I've written on here? Buying over here, selling over here, and then experiencing FOMO and buying again, and then bailing and buying and bailing. Has anybody done that, or am I the only one? Just type a Y in the box to see if I have. Yeah, experience the emotions. Oh yeah. Yes. Okay, good. Good. I'm not good that you've done that. I feel bad about it, but we've all done it. So at least you can relate to this. So this is the 8-wave market cycle, and it looks very much like the picture above, doesn't it? Where we have the trend move on the left, and this is where we want to take profits. We want to take profits up here, and we call this the end of a 5-wave sequence, the end of a trend sequence. That's really all you have to know. Then the market comes down in the correction, and corrections are ABCs. So we have an A, we have a B, and at B, this is called the bull trap. This is where traders think, we discussed this, traders think that the market is going to move back up again. They get really bullish up here, and then what happens, we have a C wave, which is a very powerful move down. So if we go back to here, this is the B wave, where the market is looking for us to make new highs again. And then we have the C wave. This happens to be a complex correction. So it's a WXYXZ. That's how I see it. So it's an ABC, X, ABC. That's how I see it. Down here, we want to be buying. Okay. So in our system, why is this like, okay. What if we could scan for these entries? Like you have a whole basket of stocks or currencies. What if we could scan for these entries? Well, you can. So I'm just going to talk to you a little bit about how we scan using a simple tool, and we scan for the gray arrow. This is called the breakout 4 trade. Now, when you take the trade, you want to look for a few other things. You just don't want to take it willy-nilly, but you might want to look for divergence. You might want to wait for a 1, 2, 3 confirmation to take the trade on a smaller time frame. Bonus with the trend line break. So these are all little things that you can do. Price action, when the price action turns around, when you're seeing green or blue candles. So this is the gray box that I'm talking about right here. This is our trade entry when we see the gray, So let's look at the scanner. This is the scanner. And at the end, I'm going to offer you a way to work with me for me to coach you, but I'm also going to throw in, I'm going to wait before I tell you about it. But this is the scanner. So really all we're concerned about is looking at the ready column and the signal column. So the ready column is when we get the gray arrow or the gray dot or the gray triangle, whatever, however we have it on different platforms. So it's when you get the gray, okay? It's the end of a swing move. It's telling us that we think with high probability that the market should, turn around from here. And then the signal is when price trades above the 12 EMA. So these are all the stocks that have shown, like over the last 5, 6, 7 weeks, that have been ready for a turnaround. Okay. So let's look at, I just took a few, for example. I like to do a top-down approach. So I look at the weekly chart on the left, the daily chart is in the middle, and then the 60-minute chart is on the right. So this is American Tower Corp, AMT. I want you to just recognize the patterns. Now, on the weekly chart, I've had to run the scanner on the weekly charts because we've had such a massive move down that the daily chart wasn't the one to do. It was the weekly chart to do. So here we had a strong uptrend, which you really can't see. We have the purple dot at the top, and then we get the gray dot here. And this is the first time during this entire move that this gray dot appeared. The first time that this signal appeared. It didn't appear over here, it didn't appear over here. I mean, I can tell you right now because I know exactly what goes into it. This is the first time it appears. The green arrow is the signal when we go above this green. What we started to do was not to wait for the green. We would scan for the ready, and then take a look at the daily and the 60-minute to see when to take the trade. So I said go down to a smaller time frame and go down to the hourly and look for a 1, 2, 3 reversal, or look for some kind of indication that the market is moving up. Now this is a good example where the market moves off the lows and then it comes down without taking out the lows, and then it starts to move back up. So this would be a great entry sort of in here once we started to get the ball rolling with it. And I'm not going to talk about profit targets at this point, but I just want you to get an idea of the pattern. Now here's another one, same pattern. We have the purple dot up here, the gray dot down here. Same pattern. You have your strong trend. We have the nice correction down. And again, this is the first time that this gray dot appeared. The first time. It did not appear over here. I can just tell you that with certainty. And then you would again look at the 60-minute and see your 1, 2, 3 reversal. I use the daily because it gives us a good profit target in between. When price gets up to the tunnel, that's and a little beyond, that's probably a good like first area of consolidation, which would be the wave on the weekly. Now you might ask, well, what are your results, Jody? So I can just tell you that I've taken these I've documented these trades since June. I didn't trade in September, personal reasons. June, July, August, and October. So in June, I took 5 trades, July 12, August 7 trades, October 5 trades. And you can be as active or as inactive as you want because there are tons and tons of trades. In June, the average hold time was 4 days, July 8.75 days, in August 2.43 days, and October 14 days. So why, you might ask, well, why was the hold time 14 days in October? It's because I held all the trades to expiration. Over here, I didn't hold the trades to expiration. I set a profit target, and I'll show you the trades I'm taking. But here I held the trades to expiration, the options trades I'm talking about. So that's why. And then this is the P&L, the monthly P&L for these trades, and the risk per trade is defined risk per trade, $5,000. Okay, for each trade, and it can be smaller, obviously. So here are some more examples. Okay, XLF. Okay, so financial ETF, same pattern. You saw the SPY. Well, most of the ETFs had the same pattern, right? So another thing that you can do is you can be aware of which ETFs are performing better, or which you think will perform better, and take those trades because there are lots of trades. So this is another trade. KLP, another trade. Berkshire, it's one of my favorites. Another trade. Now, I want to show you, with most of these, they've already moved up a lot, so you're not going to be taking these trades right now. Okay, it would be a different sort of a different setup because they've moved up a lot. Look at this, Berkshire. I mean, you're not going to start jumping in right now. You want to wait for, you're taking a different trade setup. You want to take the trade when you see the gray, and then you want to take the trade when you have some sort of 1, 2, 3 reversal. So here it would have been right over here with Berkshire, and that's when I took the trade. So I'm not in the trade right now because it was a defined trade at that time. So what we want to do, or what we can do, is we want to look for, when the gray dot shows up, not the signal, which is up here, but when it shows up initially. And so that would be this, okay, AVB. So here's an example of one that is just showing up right now. And again, you want to wait for a 1, 2, 3 reversal. So here on the hourly, it's really not time to enter yet because you want to see the red candles turning around and turning green and start to move up a little bit. I'm not saying that this is going to be a winner, but I'm just saying that this is one of the trades that just showed up based on the gray dot. So you might say, well, okay, how do you express yourself? What kind of trade do you take here? So I'm going to tell you. First of all, the premise is that you believe the stock will hold above support. So you're neutral to bullish. You don't need the stock to go screaming higher, although many of these have. So what you can do is you can always buy the stock, okay? Or you can buy a call, or you can buy a call debit spread, bull call spread, or sell a put credit spread. Now, all the trades that I showed you were bull call spreads, call debit spreads. That's how I expressed my interest in these. And it's yeah, so that's what I did, but you can certainly do any of these, and of course buy the shares and set actual profit targets. So that's my system that I'm currently trading with. And now I want to invite you to join my next level coaching program so that you can have your own personalized trading plan that you can follow with confidence. We talked about the things that you need to do to move from hobby house to transformational villas, and I want to help you get there. That's my role as your coach. I want to help you get there. So the website to sign up is fxtradersedge.com/next-level-coaching. And it's in there in the chat box right now. It's in my next level coaching program, but I have a few bonuses as well. This is a one-on-one coaching program where you will work with me directly to create a blueprint for your trading business. We will assess your current strengths and weaknesses, assess your current situation and clarify your goals, and develop a step-by-step plan to achieve your goals, and outline the strategies, tools, and timelines to achieve your goals, and discuss your capabilities to help you implement your goals blueprint. And you'll have unlimited coaching support for 6 months. So we will start with a 45-minute starter session. We will complete the blueprint in a personalized 3-hour session. You'll have your roadmap right there, and it can be broken up into 1 or 2 or even 3 sessions. And with unlimited emails and coaching support for 6 months, I have your back. So we will create a planning blueprint for your trading business. Now, I'm going to throw in a bonus because I did talk to you about our trade scanner and I showed it to you and I'm very excited about it. And why not? I said, why not? Let's just see if you're interested in this bonus, you would join our Discord and you'd get the trade scanner every week. So every single week for 3 months, I would print it out for you and post it in the we would print it out and post it in the Discord channel. And I will also have some group classes to discuss trades and the methodology behind it. Okay, and I'll actually we'll discuss the trades that are on here and decide which ones are the best trades based on what I'm seeing and based on what you're seeing, and we'll be like a little sharing community about this. So this is Jeffrey, one of my coaching clients. Jody has been my coach for over 1.5 years. It's actually been much longer than that now. I have to ask him to. Working with her has truly been rewarding. She has a vast knowledge of the markets and combines that with extraordinary technical expertise, patience, creativity, and discipline. My investing skills have definitely been enhanced by this experience, and she is spot on with her assessment of the 10 habits to become a successful trader. Success takes work, but the outcome is well worth the journey. I'm just going to get to the bottom line here. The price is $7.97, but I'm offering it to you over the next good for 24 hours for $5.97 with the discount code 200 off, 200 OFF. Okay, only good for the next 24 hours. So we're going to literally take it down for the $5.97 price in 24 hours, but you will still be able to join in at $7.97 after the 24 hours are done. So these are private one-on-one sessions. I don't have a lot of, it's my time. Plus the bonus is that you will get the trades every single week that I am looking at in my own trading account, and we will discuss them. We'll have some group sessions about that. So I am running out of time for questions, but I want to thank you so much for staying until the end. I hope you enjoyed this presentation. If you do, give me a little feedback. Say, yes, it was good, Jody, because I like to know that I'm getting through to some people. And I really appreciate being here. Thank you for inviting me. And I hope you join me.